Hello, everyone. Thank you for joining me on my first conference call this year. If you have any questions, please write them in the chat box and I will answer them in the end of the presentation. Today, I will talk about my strategy, my portfolio and recent performance. At the end, I will also share with you my current market views and my future outlook. If you have any questions, you are also welcome to contact me anytime through my webpage, through LinkedIn, Instagram, or email. For those who don't know me yet, my name is Nezatron and I'm elite popular investor from Slovenia. I joined eToro in 2020 and I became popular investor in 2021. Since then, I passed the CISI exam in International Wealth and Investment Management that is required for elite level. And I'm very proud to say that my strategy was recognized as value investing strategy by eToro. Besides investing, I was studying biotechnology at biotechnical faculty at University of Ljubljana. I had few interviews recently. I had interview for French Grazia magazine and for Forbes Czech magazine. You can read both of them online. Now I would like to tell you more about my strategy. As I mentioned, I'm a value investor. That means that I'm looking for undervalued companies on the market. My analysis is based on companies' fundamentals. I always analyze companies' financial performance for past 5 to 10 years before I decide to invest in it. As a value investor, I like to see growing net income, revenue, and consistent return on invested capital. No, for me, are companies with debt that they cannot afford, companies that are diluting number of shares, my goals are long-term and I'm focused on long-term growth. That's why I am not focusing on short-term volatility on the market and I'm not making any sudden moves. Now let's go to my performance. In first 2 years on eToro, we had 2 fabulous years and last year we experienced some pullback that was due to high inflation and growing interest rates. My portfolio ended the year with minus 8.50%. This year, my market rebounded slightly at the first months of the year, and right now my portfolio is at plus 0.67%. Here on this graph, you can see my performance compared to SP 500. Since I joined eToro, the green line represents my portfolio and the gray line is SP 500. My portfolio consists of 25 different assets. Right now, I have around 30% in cash. That's because I think that market is currently overvalued and I'm looking for more opportunities to invest in companies that I already own and some others that I have on my watch list. Otherwise, I'm invested in many different sectors. Some of them are technology, health, consumer staples, and basic materials. I'm invested in basic materials through companies like Goldberry, Rio Tinto, and BHP. Besides stocks, I also have few ETFs in my portfolio. One of them is bond ETF. Since my last conference call, that was in December last year, I received quite a few dividends and I made few changes to my portfolio. I decided to sell 2 companies. Those are EPD and DIL. I decided to sell EPD because of change in tax of publicly traded partnerships. And I decided to add 1 company to my portfolio. That's a company called Dometic. Dometic is a Swedish company that is a leading supplier of cooling, heating, and sanitary systems for mobile homes. I have strong growth prospects for this sector, and that's why I decided to invest in Dometic. Earnings season is almost over, as more than 94% of SP 500 companies already released their earnings reports. And I would like to share with you some insights from companies that I own and I find interesting. Meta released their earnings report that was better than market expected. And they also said that they will cut cost on metaverse development. Market really liked the news, and that's why the stock jumped 20% after their earnings report. In my opinion, Meta is a very good company and I have very positive opinion about them, but I believe that this jump was too sudden. Microsoft, on the other hand, they released earnings report that met market expectations, but they reported the slowest growth since 2016. Some big news came from Microsoft even before their earnings report. They announced that they're laying off 10,000 of their employees and that they are investing $10 billion more to ChatGPT developer OpenAI. As you probably all know, AI is right now one of the hottest topics on the market. Some bad news came from Adidas. They said that they're expecting loss this year if they won't be able to sell Yeezy inventory that is left after they ended collaboration with Kanye West. I think that this is really a big problem for a company, but I have very high hopes for the new CEO, and I believe that they will be able to overcome this issue. Now let's continue to my current market view and my future outlook. As I mentioned, market rebounded in the first months of this year. We can see that on this graph represents SP 500 index. The growth was partly because of better than expected earnings season and also good inflation data that came in from December. But you can also see that right now we are in a pullback. That is partially because inflation for January came in worse than we expected. Here you can see CPI index and how it moved over the past years. CPI is one of the most important measures of inflation, and prices rose very fast last year. You can see that CPI peaked in June last year. And for example, food prices rose for almost 10% during 2022. After June, CPI slowly started decreasing, and data for January came in a few weeks ago. It showed that inflation is not slowing down that fast as we were hoping for. Another important inflation data came in later, that is personal consumption expenditure price index, and that is Fed's favorite measure of inflation. It was also decreasing since June, but data for January showed that it started growing again. So how do we fight inflation? Fed started fighting it with aggressive interest rate hikes that started last year. There were 7 interest rate hikes, and they continued this year in January when they rose interest rates for another 25 basis points. Because inflation is not coming down as fast as we were hoping for, market is expecting more interest rate hikes on following meetings in March, May, and June. Here on this graph, we can see target rate probabilities for March meeting, and the market expects another 25 basis point hike. Prices are rising and Fed is tightening, but labor market is still going strong. Jobs report for January showed that US market added more jobs than we were expecting, and unemployment rate is at very low levels at 3.4%. Even though we had some big layoffs in tech companies in past months, they don't have that big effect on unemployment rate because tech sector only represent a small portion of whole US market. Then we can continue with Europe energy crisis that started last year with Russian invasion over Ukraine. Europe was relying very much on Russia's energy supply, and because that ended, they had to replace energy sources from different countries. They started preparing for the winter during summer, and they started filling gas storages with gas from other countries. That's why natural gas prices peaked during summer. But Europe was lucky because winter passed with higher than expected temperatures, and that's why demand for gas was lower and energy prices dropped. That can be also seen in performance of European companies. Here we can see German DAX index and how well it performed during past months. Another problem we are facing because of growing prices and growing interest rates are credit card debt that is growing and savings that are at very low levels. Here on this graph, we can see data until October of last year, but the trend is continuing this year. Credit card loans are slowly reaching $1 trillion, and savings are at very low levels. That's because people are having a hard time paying off their debt because interest rates are getting higher, and that's why they're cutting on their savings. Housing market is also cooling down. The total value of US homes declined by 2.3 trillion in 2022. That is also because of high interest rates, which affects mortgage, how expensive is mortgage for people, and that's why demand dropped. I think that we will see this trend continuing until the interest rates are remaining high. Now the big question is, are we heading for soft landing or recession? I think that Fed has a really hard job doing. They have to control inflation and bring it down to desired 2%, and that's a very hard job. I don't want to predict anything. I think that we will see in following months how this will resolve. But meanwhile, I am remaining cautious and I have my eyes open for any new opportunities, and we will see what will happen. For the end of the presentation, I would like to invite you to follow my posts on eToro and Instagram, where I am regularly posting about current market conditions and I'm writing about different investing topics. Thank you for your attention, and now I will answer your questions. I already received some questions on Instagram, so I will answer those first. First one is, when did you start investing and why did you choose eToro? I started investing when I was around 19, and then I joined eToro in 2020. First, I had my virtual account to see if eToro works for me, and I really love the platform. I love the community. That's why I decided for eToro. Next question is, no one can predict the future, but how long do you think you will continue using eToro? I'm using eToro for my personal long-term investment, so I don't have any intention to stop anytime in the future. But yes, of course, something unpredictable can happen. And in any case, I will let you know as soon as possible. Third question is, if I invest in crypto assets, I'm not, I haven't analyzed them and I'm not exposed to crypto assets. Do you make copy dividends? So far, I haven't withdrawn anything from my account and I don't have any intention in near future. What are your plans for a recession? In case of recession, I'm planning to look for undervalued companies on the market that have strong balance sheet, so they can survive through recession, and they are not relying that much on their debt. And one more is, if I have more than one profile on Instagram, now I have only one, that's nezatron.investor, and this is my only Instagram account. There are a few others that look almost exactly like mine, but that's not me. If I would never ask you to invest money or ask you for personal information. You can also see in highlights of my profile how to recognize a fake account. I think this is all. Thank you all for your attention, and see you next time.